Hey YouTube, this is the Robinhood investor. Hope you're enjoying the holidays and had a great week of trading. As always, I really appreciate support, so if you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. Today I wanted to review my Robinhood portfolio's current state, how it's been performing the last couple of weeks in the volatile market, and what I plan to do next year in 2019. This does not include my other brokerage accounts, 401k, and Roth IRA retirement accounts. Currently, my Robinhood portfolio is over $144,000. In terms of performance, past week up 3.54%, past month down 8.43%, past 3 months down 16.23%, and past year down 5.13%. And in terms of at one point for past 3 months, I was down 20.8%, which equates to $35,773. And at its peak, I was up to $172,436. So as you can see, the past couple months, past 3 months have been very volatile, but I didn't sell any of my positions. And in terms of performance, it's relatively close to market performance since half of my portfolio tracks the S&P 500. I know it's painful to see your portfolio dip, but definitely do not get emotional and panic sell. I personally would continue to hold while adding discounted stocks and ETF to your positions. I'm a long-term investor with a long time horizon, so my risk tolerance is fairly aggressive. Next year, I will continue to add to my holdings with growth and value stocks that are heavily discounted. Just because the price of the stocks are lower does not mean the value of the companies decrease. If the company fundamentals did not change significantly and you believe the business will still be strong, gradually buy more shares and dollar cost average down. Think of it as buying what you are already going to buy, but on sale. My portfolio, as I mentioned, is half ETFs that follows the market and half individual stocks in different sectors, market capitalization, and region. So it's fairly diversified. In 2019, I plan to continue buying dividend-paying value stocks because they're good. The dividends are good passive income, and as well as growth stocks because some of them are oversold and at a more justified price than a couple weeks ago. In addition to averaging down on stocks, I plan to increase my cash position so that when there are great opportunities to buy, then I would have the resources to do so. So that's all for this video. How was your portfolio this past year? Comment down below. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.